Greetings, everybody. Trust you're well. It's your friend, your brother, Tope here again, for another, series, another session with Israel Keys Markets. Um, from last week, last time that we met, we spoke about, structures, market structures, and we spoke about how, you can use that to identify market moves and all that. So today we're looking at the next thing, one of the next bullet or weapon in your arsenal. It is stop hunts. Stop hunts is one of the major pillars and foundation of the way of the philosophy we trade in Israel Keys market. Okay. Um, what I want you to put in your mind straight away is when you hear stop hunt means exactly what it says. Stop hunts. So we can start with this. Wherever people of retail traders put all their stop losses, the market makers go there and they use it to inject liquidity into their own trades to move in the desired direction they want to go. I repeat, stop hunts just simply means the market maker is going to where the stops of retail traders are being placed and they use it to fuel their own move in their desired direction. Okay. And stop hunts are always found at swings, either major or minor swings. There's always stops and placed at different levels on the in the market. Okay, because retail traders have been trained to trade in a particular way and to put their stop in particular places and all of that. And the main market maker, they just prey on that straight away. Right, without further ado, a recap from last week. Last time we met, we were talking about, market structures, how, market structures are formed. And we talked about the three candle formation, having three candle formation with the middle one has the lowest point, and the two low point is higher than the middle. This would be for a low, a swing low, and a swing high will be the opposite. It will be three candle formation, but the middle candle will have the highest high, and the two candles on the left and the right are lower than the candle in the middle. Now, at different points, swing highs and swing lows, you will either have one of this type of formation. Okay, at swing highs, you would have this type, which is a three candle formation, um, three candle formation, this this type. Those will be happening at swing highs. So point like this, highs, you have this type of setting there. And at swing lows, you have this type of three candle formation. So at this kind of swing low, you have that. At this kind of swing low, you have that. Same thing for here. You have three candle formation. However, the middle one would just be the lowest point. And what we would then want to identify is when we are talking about stop hunts has to do with previous swings. Okay. Now, in later installments, we'll be talking about the kind of swings we can be looking for. Okay. Let's just assume, looking at this chart here, this raw drawing here, that this is the movement of price, as you can see. Okay. Price is moving down. He gets to a particular point, he pauses and rallies up, and then price comes down, and price did not. What you see here is um, price. You not see that the candle wouldn't close below this low, but rather you see the body of the candle above that level, but you see the wick of the candle. Okay, the wick of the candle would just be below that high. Okay, and then the next below that low, sorry, and then the next thing we want to see is price move back from that area, and this is what qualifies what qualifies stop hunt until you have this move back breaking above the swing high just before the major lowest low or swing low. Okay, if we don't have a return a rally back up to break market structure, stop hunt has not taken place. Okay, stop hunt is not taking place. Okay. So a stop hunt only happens when and until we have price rally back up and breaks market structure. Until that happens, we don't have a stop hunt. Okay. So I'll go through it again. Stop hunts happen when we have current price. Yes, let's use this example here. Okay. So these are bullish stop hunt. So when current price drops down below a previous swing low. I'm using swing low now because we're looking at a bullish stop on. Drops below a previous swing low. The candle doesn't close below it, but you see the wick of the candle, and then you see price rally back up and breaks market structure. So remember, every three candle swing low or swing high is a market structure, okay? And because price is fractal, you can look at this on any time frame. It could be on the daily, on the hourly, on the 15 minutes, on the weekly or monthly. Three candle formation is a three candle formation, and it signifies a swing, okay? And market structure. So this market structure, until that market structure is broken, this structure is broken with this move back up, stop hunt has not taken place. Okay, let's do the bearish example. So we would have a previous market structure high. Okay, previous market structure high. You see price rally past that high, and then it doesn't close above it. You see it spikes, and then price drops down and breaks the swing low just before the swing high. Okay, that goes past this previous high. That is the swing low before the stop hunt. Okay, let me just recap. We're saying stop hunts are used to fuel the market makers drive to their desired direction. Okay, the reason why this happen is at swing highs or swing lows, we have stops, retail stops. Okay, retail stops resting here. We also have something called sell limits. Sell limits. So people trading breakout, they'll put all their trade pending orders here. So to say if price comes and breaks below that, they're all going to jump in and short. So what the market maker is done is it's seen all this money over here, trillions and trillions, or let's use volume. There's a lot of volume there stacked here. The market maker dips their toe into that area of high volume. They pick up all the orders for the sell and also trigger stop losses for people who caught this move, this small move up, this move from there, move up. Some people have caught that trade and they put their stops there. Okay. So they trigger all their stop and also trigger all breakout traders. Now, as soon as they have enough liquidity or let's say fuel in their engine, boom, the rocket takes off. The rocket takes off, it breaks the previous market structure high. Once that happens, we call that market structure break. Once market structure break happens, stop hunt is taking place. Stop hunt will be represented as SH. Okay, stop hunt. Stop hunt is taking place. Okay, so let's go to the bearish one. So we have a three candle swing, a high forming. Then we see price rally up past that high. We see spike to the high. Same thing, they're triggering all stop losses and they're triggering all buy limits. So for the move, for people putting trading breakouts, and they'll be trading buy limits for long here. And some people that got the move down, they'll be putting their stops there. So they're triggering two lots of people, okay? Two types of people. The breakout traders and the people who cut this trade down, they put their stops there. They're triggering everybody, and that does what? It fuels their engine for the rocket to take off and come down. Once that happens, market structure break happens. Once market structure break happens, When market structure break happens, then we are guaranteed or we are certified that stop hunt is taking place. So in other words, we can say no market structure break, no stop hunt. If you don't see a market structure break, stop hunt has not taken place. If you forget anything today, don't forget this. No market structure break, no stop hunt. Okay? So now, another point I want you to remember is when we qualify this move down or this move up as a market structure break, we must see a candle close below this swing low or below or above the swing high. So candle close above. Now, the reason why this is good is if we just see a spike, candle spike above it and close below, that could be another reverse stop hunt. Okay. If it's a spike, don't trust it for continuation. Okay. It must be a candle close. It must be a candle close. So this candle must come down, close below that low. Then we say, yes, market structure break has happened. And when market structure break happens, stop hunt has taken place. Now, when stop hunt takes place, the only thing left for us is to now find out, okay, where can I enter into the trade? And most of the time when the price break market structure, it has left a lot of orders here because the move is always quick down or quick up. After it's taken all the, got enough liquidity there, the move will be aggressive. And because the move is aggressive, it's left some orders, in its wake. And the price likes to fulfill something we call efficiency. Okay. The market likes to fulfill something we call efficiency. It simply means that they like to meet everyone's order. They like to pair everyone's order. They like to pick up everyone's order. They don't want to leave any order left without attention. Okay. So, and because of that simple fact, we are sure to know that once market structure break happens, price will at some point return back to the origin of the drive down. Okay. It will return back to the origin of the drive down. So in this case, we're talking about the bearish. In the bullish, it will be the move up and it will return down to the origin. Okay. But our focus is not really the entries for today. But what I want you to be able to identify is, has a stop hunt taken place? Okay. So another example I want to give you is this final drawing here. This final drawing here. Now, if you notice, we have this intermediate high. Let me clean the drawing. We have this high formed over here. So like, people will have put their stop losses there. People will have put their buy limits there. So people trading breakouts, they'll put their orders here. And people who already cut this move down, they put their stop losses there. So we then see price move up. Price moves up, and then price comes down. So price comes down. If you notice this first move down, it didn't go past this level. So price came back down into this area, but it didn't close below, and it rallies back up. In that case, there is no market structure break, no MSB. So I call market structure break MSB. In fact, let me annotate it for you. So MSB means market structure break. Market okay, that's what MSB means. Okay, so there was no market structure break in this initial move down. Okay, so this initial move down did not close below. It didn't come below. It didn't close at this level, and because of that, that is not a market structure break. And because of that, there is no stop hunt in the market. Then the price rallied back up again, and then finally came back down and broke below this level we're looking at, here. Once that happens over here, once that happened there in this area, at that point that price broke that swing before the rally up, that is a stop hunt. That is a market structure, and it is confirming. That is a market structure break, and it is confirming a stop hunt. Okay, it's confirming a stop hunt. Remember this, like I said, no market structure break, no stop hunt. Let me type that as well so you can remember. No MSB, it means no stop hunt. Okay, stop hunt, we'll abbreviate that as SH. Okay, no stop hunt. Okay, so on this, so based off of this, like I'm saying, is a foundation of the way we trade in Israel Keys market. Okay, and majority of traders, successful traders, they pick this up. You just need to understand that all we need to know very well in the market is the structures. The higher highs and higher lows and lower highs. Those kind of things. Once you're able to identify those successfully, you'll be able to then look at the chart and then identify stop hunts when they take place. Once you know when stop hunts is taking place, then the only thing left for you now is to know how to enter into the trade. Now, for example, when Israel posts trade opportunities, it mentions stuff like, oh, we've had a stop hunt of this particular area, or we've had a stop hunt of last month, or we have a stop hunt of yesterday. What it's simply trying to say is this, that the price has rallied past the previous high and it's closed below the swing low that formed that rally high. Okay, and then we're preparing for entry into an origin, which is normally you could call that a demand, a supply zone that created that rally down, or a demand zone that created the rally up. Okay, so once you're able to identify these things, it will be a lot easier for you to start identifying entries. We'll talk about entries in another lesson. For today, we're going to focus on just looking at stop hunts, because we need to take it in small bites. Okay, so have you got any questions so far? Any questions, Idris?
No, not at the moment. Not at the moment. I'm still learning. So when I do
Okay.
have questions, I will ask.
No problem. No problem. So I'll just move over to a chart now, and we just pick out what we've been talking about in the charts now. Okay. So let's go over here. Okay, what pair should we choose? Let's do USD CHF or okay, I think maybe use Euro JPY because I traded it last week. Okay. All right. Let's clear the drawings. I'll put the daily demarcators there. Right. So the first thing I'm going to do is we'll talk about the swings, and then how we would enter into the trade based off of what we mentioned. So there was a trade that I caught last week from here, this area over here, this area here, and it was all based off of this simple happening that I just showed you now. Okay, so we had, so let me bring the annotation again. Where's that? Okay. So, oh, not this one. Not text. Okay, market structure as one. And then the next we want to put is market structure break, MSB. Let's make that red. And then we want to put in a return to origin. Let's make that blue. Okay, so everything I just said now, just what the way it played out, okay? So first of all, let's identify the swings. So this is what I was looking at. I was looking at this swing low over here. Oh, hold on a minute. Yeah, so this swing low was one. There's this daily low over here, which is a structure. Okay. And then I put a structure here, structure there. Okay, that's fine. Right, so this is what happened. I'll drop a line on that low. And if you notice, price came down. Let me zoom in so you can see this properly. Okay. Let me remove that circle. All right. So what this? So price came down. Price came down to this low. It became an equal low to that low over there. And as we know, there's a lot of breakout traders here. Okay. People want to go short because price is being fallen. So they're thinking if it breaks past this low, we are all going to sell. Okay. And also people that caught the trade at this point, okay, price rallied up, they put their stops here as well. And guess what? The market makers know that. And because of that, look at the huge candle. They tricked them. The candle came, boom, all the way. Guess what? It closed back above this black line. It closed back above that level. This small move has triggered a lot of traders. It's triggered all their stops. It's triggered all their sell limits. People want to break out trade, okay? And once that happened, look at what simply happened again. Price just rallied back up. Remember I told you it will be aggressive because they got the fuel in their engine now. The rocket takes off. And what happened when the rocket took off? Look at the structure over here. The structure here was what? Taken out, price closed above it. This close above this level confirms to us that yes, a what? Stop hunt has taken place, okay? Because a market structure break has taken place, okay? So let me label the market structure breaks for you. So this line over here, that was the structure, yeah? That was the structure. And then we got the break. I'll call that MSB. Okay, that's the break. Once the market structure break happened, it instantly confirmed that stop hunt has taken place. Once stop hunt has taken place, we should now be alert to be like, okay, how can I get into this trade now? How can I get into this trade? How can I take advantage of this move? I know the market is ready to go, is ready to blow. Okay. So all this simple action here confirmed stop on. And guess what the market did? Let me use my arrows to draw it. So where these dropped down, then these rally up, these dropped down that took out the low, boom. Aggressive move back up that broke the structure, became market structure break. And guess what? It returned back to fulfill market efficiency. So here you can enter your trade in any of this level over here. Okay, we'll talk about entry later, and boom. I caught this trade. This same happening took place in Euro USD as well. So for your homework, Idris, I can tell you to just go on this particular day. Let me find out the day it was. The 22nd of May on EU. Go and identify this that has happened. You will see this happen on EU. Okay.
Okay, so sorry to interrupt you. Are you there?
Yes.
Sorry to interrupt. So basically, I'm gonna try and say this in a layman's term.
Yeah.
So basically, you entering that trade
Yes.
where the market structure, basically, stop hunt happened, and then I'm assuming everything is now spiked back up, which obviously means your investment, which if you invested earlier would have been a risk, but because you entered at the right time,
Yes.
it paid off. Basically, that's what
Yeah.
I'm gathering from here.
Okay. So let me break it down. I like the way you've come in like that. This simply means the first time that price rallied back up here, once you broke that level, it's still not the best time to enter, because we know they always come back and pick up more orders. And if you notice, the price at the top here, price was higher at the top here, but price was lower here. If you bought lower, you've creamed the market better than if you bought higher here. Okay, you understand? So you've not bought. Let's use this as an example of the TV. They just made this brand new curved TV screen, amazing TV. Boom, the price went up. Boom. When they just made it, everybody piled on when it was selling for £1,300. But you waited for 3 weeks after, right? Because they suffered something in economics they call law of diminishing returns, where people their hype is over and everything, and then the price came down a little bit. But price came down now. Boom. When it came back this time now, this became, I think, this coming down, let's just assume, was Christmas time. Everybody wanted to shift their stock and everything. Price came down, and you came in nicely, and you picked the TV at half of the price it was at that level. You came, instead of paying 1,700, you came in and picked it up for 800 quid. And then after you did that, after Christmas again, Corey's, Argos, everybody took the price up again because it's a brand new TV. Then I'll start adding updates. The TV is an amazing TV, and boom, the price skyrocketed.
Again.
Yes. So you have made a better investment judgment, okay? Because you didn't jump on like everyone did. Because this move up could be a fake move up. It could crash down. But you waited for price to move up and then confirm to you that they want to go up by closing above this market structure break, this price.
So that's the key, basically. When they do close above the market structure level, you know that they're going to spike back up again. Like you said, the rocket is going to...
Exactly.
Right.
So the market makers have come to get fuel to drive the price up at this level. They've got their fuel. They got what they needed. All the sell limits and all the stop losses, they've triggered everything, and boom, they went up, closed above this level. Once that is done, then you just wait. Okay, I'm gonna enter at the origin of the price. I'm gonna enter, and then price came down nicely. So you can use a fib retracement to get into this trade. You can use there's some price patterns that will be showing you guys later to enter into this trade, and then price just come in nicely, trigger your pending order, you put your stop loss there, and you just watch price explode. It exploded for the next 5 days. This same thing happened on Euro USD. It happened on Euro USD exactly this way. In fact, Euro USD is still rallying up today. It's still going up. Yep, it's still on the up. It's still on the up. So that was what happened, with this particular day. And look, it's still on its way up. Okay.
Wow.
It's still on its way up.
Wow. So but then what happens then? Well, I'm assuming if you notice the pattern, I'm assuming starts to drop, you then sell.
Yes, you could then sell. There's nothing stopping you from selling. You make money, if price goes up in Forex or when it comes down, provided you're on the right side of the market.
Okay.
Yeah.
It sounds pretty straightforward, but I know there's there's probably a bit more technicality to it, but it sounds straightforward.
I want you to think it sounds straightforward, because that's the beginning of greatness. Because the moment you start to say, in my experience, the moment losses start to come into play is when we start to complicate trading. Trading is not meant to be complicated. It should be simple, like you said. All you just left for you is to be able to identify when a stop hunt has happened. You can do this on different time frames. You can do this on the H4. You can do this on the daily. You can do this on the weekly. You know, well, Israel is going to take you guys through some other midterm to long term way of trading it. But I'm just showing you the foundation. So this,
Foundation.
I'm telling you, this simple thing I've told you now, just this simple thing I've told you, it, it, it's the best thing. I'm telling you. This is
It's
what
like the basic structure you need, isn't it?
exactly, exactly. This is what you need. All that you need. Okay. So I'm gonna implore you to please, if you wanna check out Euro USD as a homework for yourself,
Yeah.
because in trading as well, the best thing is for you to do. If you don't do and you're just looking, you don't take
Look,
action, you wouldn't understand it. As with every skill set, if you want to learn how to play musical instrument or yeah, whatever you want to, you need to put your hands in and actually try to, to do it. So that will be your assignment, and feel free to post it in the group and ask question that is this correct. So what I would like you to do is to actually identify it. Maybe you can identify on two pairs if possible. Label it out just like I've done.
yeah.
Now to use the text is that number, that A button there. You click on that A and you can type. Once you type what you want, um, once you type what you want, you can drag it to the location and it stays there. Okay, it stays there. So even if you move the chart, it stays there, and then you take the picture and post it. Okay.
Okay.
Yeah. So yeah. So this is the other formula I want you to remember. Okay, about stop hunt. For bearish stop hunt, is equal to spike high plus market structure break.
Right.
Spike high plus market structure break. And then the bullish stop hunt, spike low plus market structure break. So this is what I mean. This is the spike low here, spikes the low plus market structure break. That confirms that stop hunt has happened. Okay. Yeah, this is just a simple formula to help you remember. So bullish, you'll be spike low, it spikes a previous low, and then market structure break. Bearish spikes a previous high, and then market structure break. That confirms stop hunt. And bear in mind, this pattern you've seen here, it will
Yeah.
display itself in many different varieties. So if you notice the third drawing that I did before we came to the live chart, the third one that I had a high, and then it came down, didn't break on the first move. It went back up and then broke finally. Okay, and then broke finally. This is another type of it. Okay, that's the high. He moved down, but it didn't come below first time, went back up, then finally came down and broke. So at that point, stop hunt is taking place. But this first move, yeah, this first move down, pricing go below the swing low before that high, that means no stop hunt.
The stock hunt. Okay.
Yeah. So, and I bet you if you look at your chart now, let me in fact do this exercise with you. If we go on the daily time frame, okay, daily time frame, and you just look at your candles, for example, you see where spikes happen. Can you see all the spikes on daily candles? Look at all the spikes. Yeah. But look, there's a low there and there's a spike to the low. This day spiked this day's low. So I'm talking about this day. I'm talking about this day. Okay. It spikes this day's low. Okay. I've drawn out the low in this black line. Can you see the way it came down? It didn't close, it went back up. Okay. And then when this is happening on a daily, you then switch to your hourly to find out if you would have a market structure break. So you want to find out if you then have stuff like this. You have, so we go a low, you want to find out if you get a market structure break. So This was the previous low over here. It came below. You want to find out to see you have a rally up. So it means it's got fuel to its engine at this low. Okay. And then it went up. And that's what happened. Came back down, that spike, and then boom, off he went. Okay. And that's what happened. So you can start by just looking at your daily and just mark out where all the days were spiked. Look, there's another one here. 2 days high was spiked. This low here spiked this day's low over here. Okay. This one did a small one over here. There's a lot of it. So you just go on your daily time frame and identify all of this. Look at that high, spiked by this candle. Look at this low, spiked by this candle. Spike, spiked. So what you then see is once you see the spike, you then go on your hourly to find out, do you have a market structure break? If no market structure break happens, then you leave it. All right, we'll round up tonight's session. Hopefully, this was something very good to your ears, and it's definitely sparked some inner genius in you.